Hey everyone, and welcome back to today's Explainer. Well, we have got a seriously massive web to untangle today. We're looking at a huge mix of financial data, some really impactful domestic policies, and a few complex global geopolitical shifts that are completely dominating the landscape as of late June 2026. We're going to take all these latest market tickers and policy updates and break them down so they actually make sense. So here is our agenda for the day. First up, market milestones achieved. Second, we'll look at the mega IPO pipeline. Third is personal finance and policy. Fourth, we've got domestic disruptions and tech. And lastly, global shifts and geopolitics.
All right, let's jump right into part one, market milestones achieved.
Okay, so the bold milestone you absolutely need to have on your radar right now is 24,102.90. That is exactly where the Nifty 50 settled, closing up nearly 90 points. And honestly, the Sensex is right there with it, gaining nearly 300 points to comfortably breach that 77,000 mark, closing at 77,094. And the broader markets are totally echoing this optimism too. We're seeing mid-cap and small-cap indices both flashing green. When the market scales these kinds of heights, it's just a massive, undeniable signal of underlying economic confidence. But what's actually driving those record highs, right? Well, we're seeing some absolutely incredible momentum in the pharmaceutical and tech sectors. CIPLA surged ahead by 4.82%, making it the undisputed top gainer of the day. And then followed closely behind, we have Tech Mahindra at 2.16% and Dr. Reddy's at 1.56%. So it's not just this vague, broad market lift. Specific sectors, like pharma and IT, are genuinely doing the heavy lifting to pull these indices to these fresh peaks. Moving right along to Section 2, the mega IPO pipeline. Now this right here is the crucial question every single investor needs to be asking themselves right now. Can the upcoming National Stock Exchange and Geo Platforms IPOs actually impact overall liquidity in the Indian stock market? Because think about it, we have this high-performing, super bullish market on one hand, but on the other hand, these upcoming public offerings are going to demand massive, truly unprecedented capital absorption. I mean, when multi-billion-dollar issues hit the market, they inevitably pull retail and institutional money away from existing stocks. It's just how it works. Seriously, just look at the heavy hitters in this IPO pipeline. The sheer scale of the NSE and Geo Platforms debuts is enough to completely reshape market dynamics. But it's not just them. You've also got Zip Electric gearing up for a substantial $200 million issue, and Waterways Leisure Tourism is drawing a ton of attention too. We are looking at a market that is expanding aggressively, but it also signals a potential, tightening of liquidity as investors start hoarding cash to buy into these massive debuts. All right, shifting gears a bit to Section 3, personal finance and policy. 8.25%. If you are a salaried professional, this is basically your magic number right now. The Employees Provident Fund, the EPF, interest rate is staying incredibly steady at 8.25%. So the really crucial point to consider is, should you actually be increasing your voluntary contributions? In a fluctuating market environment, locking in a guaranteed, highly tax-efficient return at this exact rate is a super powerful personal finance strategy. It's something financial experts are advising folks to seriously consider. And it's not just at the national level. Regional policies are actively injecting cash into the economy too. Take a look at the Bengal budget for 2026. They rolled out a massive 20% dearness allowance hike for state employees, promised 1 lakh new jobs, and allocated a staggering 36,000 crore rupees for the Annapurna Yojana. That is a major regional economic stimulus. And you might be wondering, why does this matter globally? Well, because local consumer spending directly drives corporate earnings, which, you guessed it, fuels the stock market milestones we were just talking about. It is quite literally all connected. But of course, where there is opportunity, there's always risk. There is a huge debate right now around credit risk funds. On one side, you have the allure of higher yield potential, which is, let's be honest, very tempting in our current market. But you've got to weigh that against the harsh realities of credit defaults and liquidity risks. Financial analysts are explicitly warning that these instruments are strictly for investors who fully understand the underlying asset quality. So, the bottom line, don't just blindly chase the yield, make sure you understand the exact risk you are taking on. Okay, let's get into Section 4, domestic disruptions and tech. The ongoing controversy surrounding the medical entrance exam is a massive national focal point right now. The official stance hasn't budged. NTA Director General Abhishek Singh recently defended the NEET UG re-exam, stating on the record that the process was, quote, error-free and flawless. He made a point to highlight the extensive security measures they took amidst all the massive public scrutiny. But honestly, the fallout from this exam controversy is just cascading across multiple sectors. First off, there's a huge tech disruption. The messaging app, Telegram, was temporarily banned to prevent fraud and misinformation that was targeting candidates, a move that was actually backed by the Delhi High Court. Meanwhile, right on the ground, political protests are really escalating. Opposition parties are leading sit-ins at Jantar Mantar, and we're seeing intense, growing demands for the resignation of Union Education Minister Dharmendra Pradhan. It's one of those wild situations where educational policy, technology regulation, and political stability are just all colliding at once.
Finally, let's zoom out for Section 5, Global Shifts and Geopolitics.
Over in the UK, we're seeing some massive political upheaval. Prime Minister Keir Starmer has shockingly resigned in a very teary farewell. And now, Andy Burnham is rapidly gaining momentum as a potential successor. When you have a sudden leadership vacuum in a major G7 economy like the UK, it creates immediate waves. It sparks a ton of questions about international trade continuity, diplomatic stability, and future economic policies that, frankly, directly affect global supply chains. And things are equally, if not more, complex in the Middle East. We're getting some incredibly contradictory signals regarding US-Iran relations right now. So, on one hand, there are reports of easing war tensions through a strategic interim memorandum of understanding, but counteracting that, literally right away, are fresh threats from Iran about shutting down the crucial Strait of Hormuz, following strikes by Israel in Lebanon. The Strait of Hormuz is one of the world's absolute most critical maritime choke points for oil. Any disruption there sends an immediate shockwave through global energy markets, which directly impacts inflation and fuel costs right back home. Which brings us to our final, provocative thought for this explainer. How exactly will this incredibly complex web of global diplomacy, specifically this potential US-Iran interim agreement, ultimately widen India's strategic options? Whether we're talking about managing external debt, securing stable oil imports, or navigating those mega IPOs and record stock highs we started our journey with today, every single piece is connected. It's like a giant puzzle. I'll leave you to ponder how these huge geopolitical shifts will ultimately impact our macroeconomic future. Keep learning, keep analyzing, and I will catch you in the next explainer.